Have you ever wondered why some people seem to effortlessly build wealth while others struggle, no matter how hard they work? What if I told you that the secret isn't some new age financial hack or a risky crypto investment? What if the keys to wealth were written down centuries ago and they're just as powerful today? Welcome to Finance House. Today, we're taking a journey back in time over 300 years to uncover a set of timeless money laws that have quietly shaped the destinies of the rich for generations. These aren't complex economic theories. They are simple, powerful principles that, once understood, can completely change your financial future. Stick around, because by the end of this video, you'll see your own finances in a whole new light. Let's start with the first, and perhaps most foundational law: pay yourself first. Now, this might sound familiar, but its original meaning is far more profound than just putting money into a savings account. 300 years ago, merchants and landowners understood that their first and most important creditor was their future self. Before a single coin was spent on lavish goods, debts, or even daily expenses, a portion of all income was set aside for investment. This wasn't about saving for a rainy day, it was about funding the engine of their wealth. Think of it like a farmer who saves the best seeds from his harvest not to eat, but to plant for the next season. By paying yourself first, you are ensuring that you always have capital to invest in assets that will grow and produce more income for you down the line. It's a simple shift in mindset. Instead of seeing what's left after spending, you spend what's left after investing. This single habit is the bedrock upon which all fortunes are built. In today's world, this means automating transfers to your investment accounts the moment your paycheck hits. Before you pay your rent, before you buy your groceries, before that morning coffee, you pay your future self. It's a non-negotiable expense. Now, once you've set aside that capital, what do you do with it? This brings us to the second law: acquire assets, not liabilities. This sounds like modern financial advice, but its roots are ancient. For centuries, the wealthy understood the fundamental difference between things that put money in their pocket and things that take money out of their pocket. An asset is something that generates income or appreciates in value. Think of a piece of farmland that yields crops, a rental property that brings in monthly payments, or a stake in a profitable shipping company. A liability, on the other hand, is something that costs you money to own and maintain. A fancy carriage, expensive clothes, or a grand house that's purely for show. The common person saves up to buy liabilities, thinking they are symbols of wealth. The truly wealthy, however, use their money to buy assets first. They use the income generated by those assets, the rent, the dividends, the profits, to then pay for their luxuries. This is a crucial distinction. They don't use their own labor or their core capital to buy liabilities. Their assets buy their liabilities for them. Let's apply this today. Is that brand new car that depreciates the second you drive it off the lot an asset or a liability? What about that stock portfolio that pays you dividends? Or the online business that generates passive income? The 300-year-old wisdom is clear. Focus your energy and capital on acquiring income-producing assets. Let your money work for you, so you don't have to work for your money forever. Delay gratification on the liabilities until your assets can comfortably pay for them. This leads us directly to our third law, one that's often misunderstood in our fast-paced world: the power of compounding, or as they might have called it, the patient harvest. Albert Einstein is often quoted as calling compound interest the eighth wonder of the world. But long before him, financiers and landowners understood its magic. They knew that wealth wasn't built overnight. It was cultivated like a forest. They would invest their profits back into their ventures, allowing their capital to grow upon itself, year after year, decade after decade. A small investment, left to grow and reinvest its own earnings, could snowball into a massive fortune over a lifetime. This required immense patience and a long-term vision. They weren't looking for a quick flip. They were building generational wealth. They planted financial trees whose shade they might not even live to enjoy, but their children and grandchildren would. In today's world of instant gratification, this law is more important than ever. We're tempted by get-rich-quick schemes and volatile investments promising overnight riches. But the 300-year-old law reminds us that true sustainable wealth is a marathon, not a sprint. The most powerful force in your financial life is time, combined with consistent investment. Starting early, even with small amounts, and letting your investments compound over decades is a strategy that has outlasted empires. Don't be discouraged if you don't see massive returns immediately. You're not building a sandcastle, you're growing an oak tree. Be patient and let the magic of compounding do its work. The fourth law is a bit more strategic. Understand and manage risk through diversification. You've heard the saying, don't put all your eggs in one basket. This isn't a new idea. A merchant from the 1700s would never risk his entire fortune on a single ship setting sail for the New World. The chances of a storm, pirates, or disease were simply too high. Instead, he would invest in a fraction of several different ships, each carrying different cargo to different destinations. If one ship was lost, The profits from the others would cover the loss and still ensure a handsome return. This was sophisticated risk management in its earliest form. They understood that the future is uncertain and that the key to preserving wealth is not to avoid risk entirely, but to spread it out. Today, this principle is the foundation of modern portfolio theory. Instead of different ships, we have different asset classes: stocks, bonds, real estate, commodities. Within stocks, we diversify across different industries and countries. This ancient wisdom protects us from the inevitable downturns in any single sector of the economy. A well-diversified portfolio ensures that no single event can wipe you out. It provides stability and allows you to weather financial storms, just as the merchants of old weathered the storms of the Atlantic. It's about being prepared and ensuring your financial survival and growth no matter what happens. Finally, we arrive at the fifth and most overlooked law: cultivate your financial knowledge. The wealthy of the past didn't just stumble upon their riches, they were students of money. They understood markets, they read ledgers, they studied trade routes, and they sought counsel from other successful individuals. They knew that their greatest asset wasn't their gold or their land, but their own financial intelligence. They treated financial education as a lifelong pursuit, passing down their knowledge and wisdom to their heirs as their most valuable inheritance. They understood that without the knowledge to manage, protect, and grow wealth, any fortune could be squandered in a single generation. This law is a call to action for every single one of us. In an age where financial information is more accessible than ever before, there's no excuse for financial illiteracy. Read books, watch channels like this one, learn about investing, budgeting, taxes, and economics. The more you learn, the better you'll be at spotting opportunities, avoiding pitfalls, and making your money work harder for you. Your commitment to your own financial education is the single greatest investment you can ever make. It pays the best dividends and is the one asset no one can ever take away from you. So there you have it. 5 laws over 3 centuries old that are as relevant today as they were then. Pay yourself first. Acquire assets, not liabilities. Harness the power of compounding. Manage risk through diversification. And cultivate your financial knowledge. Notice a common theme? These laws aren't about luck or timing the market. They are about mindset, discipline, and a long-term perspective. They empower you to take control of your financial destiny, regardless of your starting point. Building wealth isn't a mystery reserved for the elite. It's a skill that can be learned, and a system that can be implemented by anyone willing to apply these timeless principles. Thank you so much for joining us at Finance House today. I hope this journey back in time has given you a new perspective on building your own fortune. If you found this valuable, please give this video a thumbs up, and don't forget to subscribe and hit that notification bell so you won't miss our next deep dive into the world of finance. We'd love to hear your thoughts in the comments below. Until next time, keep learning and keep growing.